Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Friday, April 22nd, 2016. Here's a look at the daily time frame of the ES right now. We've seen a steady uptrending market. Nice continuation so far, week over week, month over month. We've seen basically price push above and below this HVN 2061s, and we thought that that could be the case. That was our primary idea, was that when we returned from the 1800s, we'd drop right into that 2061, and then we perhaps chug above and below as we widen out and trade around this HVN. And so right now we're seeing a bit of that. You can see right here, this is the primary weekly bull target on the ADR. So the PivotBoss ADR gave us our primary target that was fulfilled for the week. You also see that this level is the 25% monthly PivotBoss pivot, 2102.75, and again, in an uptrending market here, when price pulls back to the pivot range, typically speaking, that's where bulls come in and defend. You see expansion into 25%, and this is just the basic ebb and flow right now of a structured trending market. Now, I would continue to watch these prices very closely because, as I mentioned in the trading room, 2100s was an area here to watch very closely because any failed acceptance beyond 2100 would imply a retest back at 2061 with a shot at running stops below these recent lows and setting the opposite edge of this range. So we could be looking at a pullback into 2000 to 2009 here, this LVN ahead, especially if prices can't get back above the 2100s. Right now, 2077 is going to be a very important near-term support level on a short-term basis. So looking at the intraday time frame, you can see right here, prices sold off the previous session. Here's 2100s. Look at how those prices went off in the previous session, and prices continued trending downward the rest of the day, reaching the previous week's high at 2081s and that 2077 half from above. So you can see, again, 77 has becoming support. So again, the key thing to watch right now is how does price respond around 2077 once it's tested, and also if price bounces back into value. We have 5-day value at 2095s. We have the previous session's high, 2098 half. If price does push into the zone, do we see any type of resistance in that area? Because if so, that could lead to a break through 77 half and into 2061s. Right now, we're just trading in a nice choppy range here. Expect early trading range behavior. Look to fade new highs, fade new lows, short term until we see expansion. Looking at the crude oil chart and daily time frame, we were looking and expecting for, number one, a pullback from these 43.85s, which was 42.50 at the time in the previous front contract. We were looking for a pullback into the midpoint or perhaps even as low as the bottom of the range. Once we got back to the midpoint, we were looking for strength for a retest of the top, or if we would have gotten to the bottom, we would have looked for a push back above and across the range. And instead, price got to the midpoint, a little below it, and then rallied right into the top. And right here, you're seeing previous highs. This is a rejection right now, at least short term, of that level. You can see 43.85 at the top of that level. Price closed above it. You saw a rejection above the previous session's highs and a pullback into the previous day's trend. And then right here, you're seeing price come into 43.85 from below and is currently being retested and rejected right now. So if prices cannot reestablish themselves back above 43.85, 4400 evens, the expectation would be for a retest of 42.60 with a shot at rotating back across the range. Eventually, I think that these rotations down are still buying opportunities for a shot at seeing expansion to the upside. So right now, I think this is setting up very nice for a potential push into the next HVN above, which right now is 49s. So I believe that while we could see short-term rotations to the downside here, I think longer-term rotations imply a push toward 49s ahead. Now, of course, that's as long as this 36.60 remains intact. Now, looking at the intraday time frame for crude oil, you'll see right here that price is pushed above 44s the previous session, and that's 44s. You can see the bend in the 5-day profile here. Basically, that right there is a very important level. I mentioned before, prices tried to hold above 44s, failed, and look, when they came back below it, that's where resistance is made. You can see very clear support on 43s down below. So right now, we have two-sided trade, a two-way auction between 43 and 44. Rotations into 44s are to be offered, rotations into 43s to be defended back up until proven otherwise. And now I would say that 44s right here, as long as that level remains bid, I think there's a greater shot to run the stops below 43s, and that opens up a pullback into lower price levels. And again, you can pull up some of these targets here. 42.50 and 41.55 would be the next major downside levels to watch out for if these 43s don't hold. But you can see where the auction is right now. The auction is here to here, and you're looking to fade the extremes of this two-way trade right now until proven otherwise. In the middle of this range offers no edge, so you have to be patient and look to fade the edges. Okay, taking a look at gold now. Wow, we nailed gold pretty nicely here in the previous pre-market and during the trading room. We were looking during this expansion day. I mentioned, hey, the next session, watch this level right here. When price comes back to that level, look to buy it and look to push it into 65 to 1270s. And we got that move. We got that move perfectly with precision. I mentioned once price gets above 65s and especially above 72s, that's when you look to become defensive and you look to fade it back the opposite way. So fading it back the opposite way was the right way to go, obviously, because that's what we mentioned before. Everything above 1265s and especially above 1270s has been rejected so far. And so with price pushing into that zone again, the expectation was that we would see a rejection yet again, and that could lead prices back to the opposite support zones between 1225 and 1211. And so far we're seeing more of that again. I would say that if price rotates into 1260, that could offer another opportunity to defend. But right now, given the current rejection, the implication would be at least a snapback to composite VPOC at 1236.5 with a likely rotation back toward 1225s. Now, if we take a look at the NQ, right now, we were talking a few days ago. We can see how bullish this trend has been. Nice upward price discovery phase. And then we talked about on this session here how that could be the near-term high right now. And if that was the high, we were going to look to this price level, which was 45.60s, for a shot at defending that zone. And price came close a couple of days, but that was the defense I was talking about. This is the area where bulls, get trapped, because you see how bulls got above that level, couldn't see acceptance, it got back down. So when bears come back, they look to defend that area and trap these late bulls to the market, and that causes a stops run in the opposite direction. And so right here, this 45.63 was defended, and if this is the near-term top, which it is right now, obviously, the expectation was that we're seeing, chop back and forth where it widens the range. So right now, given this near-time high, we could be looking at a push that challenges this recent low at 44.26. So that's the expectation right now. Rotations higher right now in a short-term downtrending market could be selling opportunities for continuation lower. But just know that we have been in a very bullish uptrending market, and at some point, prices will snap back and attempt to push back in the opposite direction. You have to be very careful when you're trading counter-trend rotations in a primarily bullish trend right now. So pullback still to be defended. This LVN will be a very solid spot to watch here for a potential pushback across the range. On an intraday basis right now, you can see prices broke below the 45.10s. We had been building out a very clear distribution here between 45.60 and basically 45.20s. And you can see how prices have just gone back and forth, back and forth. Additionally, after pushing this low and this high right here, you see this impulse move. Nice midpoint of that range, and you can see how prices have coiled now toward the apex, and we're starting to see initial expansion to the downside. So that initial expansion here, typically speaking on the first pullback, is typically defended for a continuation in the original phase of the expansion here. So right now, you're seeing how prices are holding on these lows. If they release to the upside a little bit, there's going to be a spot up here where we may see resistance, maybe 45.10s, maybe a little higher. We don't know just yet. But given the early expansion phase to the downside, if we do push up, expect some sort of defense for a try at running the stops below 44.79 and seeing a push into lower levels like 44.41 or perhaps below. Any acceptance back above 45.10 opens up a rotation back to 5-day VPOC at 45.32 with a retest of those highs. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck, trade well, and happy Friday.